Hello guys and welcome back to TradeGlow FX. This video is a masterclass on candlesticks and candlestick patterns. What are candlesticks? What types of candlestick patterns are there? There are three types. Let me tell you what those three patterns are, how they work, and can we take trades on them. Today we'll discuss all that in this video, so watch from start to end. It's going to be a very good video. This will be a short video. I'll explain in simple terms. You must know that on this channel, I don't use complicated scientific terms. We'll learn everything in very simple terms. Now, let's move on to our first concept. What are candlesticks? If you open a chart or see any trader, you'll see a chart like this. We call it a candlestick chart. What are candles? The big ones you see in the middle, red or green, we call them candles. Now, how do you set up such a chart? If you've come to TradingView, you'll see an option on top next to the timeframes. Right-click on it and you'll get to see many types of charts. It's possible that your chart currently looks something like this. You have to change it and come to candles. Now, what are candles and how do they work? If you're a beginner, let me tell you that candlesticks work in timeframes. There are candles of different timeframes. So, on which timeframe do you have to look at the chart? It's a very important question. I've made a video on it. You can go and see. Suppose a candle is 5 minutes. It could be 1 day. It could be for any amount. Suppose this is a 5-minute candle. Now, how will it work? See, suppose a candle looks something like this. You know, it could be green. It could be red. Now, we'll discuss the green one. First of all, this big part that you can see, this colored part, we call it the body. We call it the body. And this small line that you can see above, we call it the wick. Okay? Body and wick are two parts of candles. Now, how does it work? See, I'll remove all this. Now, suppose this is a 5-minute candle. Okay? It's a 5-minute candle. It means whatever movement has happened in the price in 5 minutes is all inside this candle. Now, how do you want to see that? Now, suppose this is a green candle, right? This is a green candle. So, this point that you can see, the lowest point of the body, we call it the open point, meaning the price movement that has happened in the 5-minute time frame. That price opened at this point, right? And closed at this point. But the body, which you have, tells you the open and close points. And the wick tells you the highest and lowest points. It means the lowest point of the wick is the one where the price fell the most, right? And the price went up the most, right here. We call it high. That is the highest point here. If you go to any chart, you'll see all this above, right? Open, high, low, close, right? These four things that you are seeing, the same thing is told by this candle. What does it mean? I'll explain it to you in a line graph. Now, suppose this is 5 minutes, right? This is a time of 5 minutes. Within this, the price opened from here. You can see it. I've drawn a correct line. It opened from here, it went up, went down, went up, went down. And it applied a low, right, till here. You must be seeing this line. It applied a low till here, it came till here, and then it went up again from here. Went up, went up, went up, applied a high. This point is visible, right? And while doing this, it finally closed here, right? This open point, this close point, this high, this low, right? It must have created some movement like this, and by combining all these movements, a 5-minute candle is formed, something like this. Now, suppose this candle is of red color. If this candle is of red color, then the high and low points of the wick would be the same, but the open and close points would change. Its open point would be this, and its close point would be this. This open, this close becomes something like this. So, you must have understood what happens with candlesticks. If this candle was of 15 minutes, then the entire price movement of 15 minutes would be within this candle. This candle can also be of 1 day. Candles of 1 week, 1 month, 1 year are also formed. You can see here. So, this was the guide to candlesticks. Now, we discuss candlestick patterns. See, different types of candles are formed. Some candles are formed something like this. I will turn it back to green. Some candles are formed something like this. Okay, some candles are formed something like this. There are some candles like this. So these different types of candles are formed like this. The first candle pattern that we will discuss is the engulfing pattern. Now, what does engulfing mean? The meaning of engulfing is this. Suppose some chart pattern is being formed here, right? A red candle like this is formed, okay? A red candle like this is formed, any red candle like this is formed, and then finally a green candle is formed, something like this, right? A big green candle with a very big momentum is formed. We call it the engulfing pattern, or we call it the bullish engulfing pattern, right? Now, you reverse this thing, and gradually the market is going up. And then, okay, a big red candle is formed, okay? A big red candle is formed. We call it the bearish engulfing pattern, right? So, the simple meaning of engulfing is that a very big candle is being formed, inside which there is a very big momentum, which is eating up the previous 2-3 candles, right? That means the last 2-3 candles, by combining them, a bigger candle is formed. We call it engulfing. Now, it can be bullish engulfing as well. It can be bearish engulfing as well, right? So this is an engulfing pattern. What does the pattern tell? Look, suppose the chart is gradually coming down, right? And suddenly, when a very big candle is formed, it means that a bullish momentum has come, right? This candle is very important to know the momentum. A big momentum has come. What do people do? An engulfing pattern is formed. They make a buy entry here, and from here, the market gradually goes up, right? Such people trade. Now, I am telling you beforehand that I am telling you this guide. In this, I am giving you knowledge. I am giving you basic knowledge, okay? On the basis of this, if you come to trade now and you see an engulfing pattern, then you don't have to buy, okay? And many other things happen. Trading is not so simple that you have learned the chart pattern or the candlestick pattern, and on the basis of that, you are trading and making a profit, right? It is not like that. So, you need to learn a few more things. Now, you just understand this as basics because it is very important for you to understand this, right? We move on to the next candlestick pattern. I hope you understood what is the engulfing pattern, right? Now, after the engulfing pattern, you must have seen some such candles, right? Something like this, right? There is a small body on top and a very large wick below, right? Or you can reverse it. If I make it red, you can reverse it, something like this, right? You must have seen such candles. Now, what do we call it? We call it a hammer, right? We call it a hammer. Now, why do we call it a hammer? You must have understood by looking at the pattern that it looks like a hammer. What does it indicate? I will explain the moment inside it to you once, okay? We will make it properly. First of all, here, what is its movement inside? Okay, now suppose this is a candle of 5 minutes. Again, okay, now what moment happened inside it? I will tell you. Look, now this is a green candle, right? So, its open price will obviously be this, and its close price will be this, right? So, suppose the price opened here, okay? Now, I have explained this time frame of 5 minutes here, as I am telling you earlier. The price opened here. As soon as it opened, the price fell completely down, okay? It fell till here. Then, what happened after that? The price recovered a bit, then fell down, then recovered a bit, then recovered again. And after recovering, it finally closed here. So what does this hammer tell us? That the price fell down, right? But it couldn't fall. It recovered again, right? We call this rejection. Okay, we also call it a rejection candle. That if the price fell down, right? But the price couldn't go there, or couldn't go there. Or if selling came, right? But the selling pressure wasn't that much, buying has come back. We call it a reaction candle. So, what does it show? It tells you where the price shouldn't go, right? Where are these candles usually formed? You know that if there's a support zone, the price will go down, down, down. And then from here, A rejection candle will be formed, and then from here, it will go up, up again, right? So usually such candles are formed on support zones or any other zone that is a rejection zone. And usually, after the formation of such candles, a bullish engulfing candle is formed. So this is our second type of candle, which is a hammer candle. Let's see the last type of candle, which looks something like this, right? Now, what have I made? Plus, it's normal, right? You might not be able to understand anything in this. Let us make it a little better, something like this, okay? Now, what is it telling? Now, I will make a graph again and tell you, right? The price opened here, the price went up immediately, okay? Then it went down, then it went down, then it went down, then it crashed again, then it went up again, recovered, and finally came and closed somewhere here, right? So, you know, the green candle, this will open, this will close, so let's lower it a little, let's raise it a little, right? So that means the price went up as well, then the price came and closed at the same place from where it opened. This pattern is called a doji. Now, what does doji tell you? Doji tells you uncertainty. Doji tells you confusion. Doji tells you that the market itself is confused about where to go, right? When a doji candle's formed, right? When I tell you, look, there is a concept called stop loss hunting, right? I have made videos on that as well. If you explore my channel, you will understand, right? Stop loss hunting is when the price or the market eats up the sell stop losses of buyers as well as sellers and finally comes and closes at the same place. Then a doji candle is formed here, right? I hope you are understanding this a little in advance. It will be a big deal according to the stage, but something similar happens in doji, that the market has eaten up the stop losses on both sides, or apart from that, when is a doji formed? When the buying pressure and selling pressure in the market is exactly the same, right? Buyers and sellers are equally present there. Even then, a doji candle is formed. So in a doji candle, what you have to do is to simply avoid trading, okay? For example, if you trade on higher time frames and a doji is forming, then you will also be a little confused that where will the market go now, right? So it becomes a little difficult to find out the direction in this. So in doji, it's okay to avoid trading, right? So I hope we have understood all these three types of candlesticks. What are candlesticks themselves? What are candlestick patterns? All the three types, doji, hammer, and engulfing. I hope you must have understood all this, okay? Then subscribe to the channel and like the video. If you liked it, then thank you so much for watching this video. See you in the next one.